Hi, everyone, and welcome to the Abra Data Derivatives podcast. I'm here with Bohan Jiang, who is the head of OTC trading at Abra. Bohan, how are you?
I'm good. Thanks for having me.
Well, real pleasure to have you on. We chatted before doing a podcast a little bit, kind of getting organized for this. You have a very interesting background and some really great things that you're working on. So I would love to maybe, for anyone who's new to getting to know you, just touch briefly on your background. You mentioned that you worked at Goldman for a while. Maybe we could just start there. How did you get started in trading, and how did your journey kind of graduate into crypto?
Yeah, so I think I got interested really trading by myself, really. I would say, even back towards the end of high school, trading by myself throughout my PA throughout college. Started off, following the Euro Warren Buffett discounted cash flows and
Mm,
value investing, and then got into the more niche things like, trading single stocks, futures, and then figuring out more about commodities. I took an interest in trading crude oil and gold as well, and sort of got interested also in derivatives. My background in college is in computer science, and sort of looked into the intersection of, derivatives pricing, using sort of non-parametric machine learning models as well. So I guess with this interest in kind of macro and derivatives, I kind of wanted a quantitative risk-taking, high-touch trading seat. So I started my career at Goldman in the FX options team, firstly market making and trading vanilla and first generation FX derivatives within sort of the G10 team,
mm.
particularly, yen, Aussie, Kiwi, and CAD. And then moved on to trade G10 and EM exotic and correlation products. So this involved, a very broad spectrum of quoting second generation exotic FX derivatives. And then also, putting on trades more from a relative value perspective in the foreign exchange space.
Mm.
I was kind of somewhat always interested in dabbled in crypto at the time, mostly personally. And Goldman had just started their crypto derivatives desk for CME listed and OTC options. And so I went under the same umbrella of FX products for the business. So I essentially, signed up to do the job in New York. So I was the main trader for Goldman in New York, market making and trading OTC and CME listed options, as well as kind of future spreads, and really getting a front row seat to seeing the CME market mature and evolve.
Uh,
And so yeah, I mean that's sort of my background. And through that experience, um, I decided to join Abra back in April, because there were significant opportunities, in terms of dislocations in the vol space, and I wanted to get access to a more liquid market, in terms of the physical crypto product.
Yeah, that's a really interesting point there at the end. Liquidity, because the CME contract's been around for a while. It's still a pretty wide contract, and there's not as much liquidity. So very interesting. Before we jump into Abra, I'd love to just kind of get a little bit more insights around. So when you started market making the CME Bitcoin futures and options over at Goldman, was the flow still mostly on screen, or was there sort of interest in OTC, like spread trades or basket of options getting executed in a block form, as opposed to just trades on screen? Was it a nice mix, or was it kind of really kind of big chunky trades all at once only?
Yeah, so I would say we definitely had OTC trades for Goldman's clients. So think of it as, because Goldman's already a prime broker for a lot of hedge funds, and we essentially offer a standardized CME-like product at, same margins, but, on an OTC basis against Goldman. So that would be the type of flow you would not see on the screen. And then the flow that you would see on the screen would be, I would say, negotiated bilaterally or through voice, right? And then you would see these big blocks printed. And by and large, that's how most of the CME trades go through.
Mm-hmm.
It's a very, very low volume that you see in the options trade, not in block size and just purely on the screen.
Yeah, interesting. And then another kind of interesting component of CME was, and crypto in general, while there's the futures basis in crypto is pretty interesting. We have 40% annualized basis, 30% annualized basis we've seen earlier this year actually. But trading CME, it's kind of hard to realize that basis because there's a lot of cash management issues. There's been this thesis that since we got the spot Bitcoin ETF, now people can basically own the ETF and sell short the futures against it and kind of have a well hedged position. Do you think that that's true? Was there interest in sort of the CME basis when you were market making that product?
Yes, for sure. Because I know CME definitely has a certain, extensive margin requirements, let's call it that, for the futures. And, that was kind of the obstacle, right? In terms of capital efficiency. That was the kind of issue for hedge funds really looking at this basis and trying to put the trade on. But with the ETFs, as there was more capital sort of unallocated to other strategies, and as the basis grew larger, we saw a lot of sort of inflows into that trade, right?
Mm-hmm.
You would own spot or the ETF and sell short the futures to earn the basis, and then you would continually roll that month to month.
Mm.
Um, so that was the trade that was put on, and the increasing theory is now that the ETFs exist and are very liquid. If the prime brokers decide to give a margin discount with respect to the ETF leg and the CME futures leg, then you can leverage that trade up significantly and create
Mm-hmm.
many more opportunities for hedge funds looking to exploit that.
Yeah, that's very interesting, and it's pretty interesting because traditional finance they see something like a 40% or 30% annualized basis. I mean, that's like amazing, and so they have a lower cost of capital, and so through this mechanism, essentially crypto gets a lower cost of capital theoretically because now people can get levered long at cheaper prices because there's people taking the other side of the basis. How has your job changed today, or is it very similar to, market making uh, at Goldman Sachs on the CME products? How is it today in Abra and at Abra in comparison?
Yeah, so I would say it's been different in many perspectives. Um, at Goldman, you sort of have a very standardized way of looking at things in terms of the bank's infrastructure, the bank's risk systems, and sort of the procedure with respect to you know just the operational procedures respect to booking trades and whatnot. And that's fundamentally very different operationally. At a crypto native firm with respect to settlement, with respect to margin, and I guess the one of the more significant changes is in the default contract. On an exchange like Derivs is an inverse option, right? Where
Mm,
your margin in the underlying, whereas the CME is purely dollar based and cash settled. So some of those differences can affect risk, and also um, you know differences in settlement issues and margin requirements. But overall, the liquidity, I would say, in the physical markets has been much better, and so that's allowed me to take advantage of certain dislocations or market opportunities in a faster manner.
yeah, that's interesting. And like leading the OTC desk, so does a lot of the your counterparty trades come through OTC, but maybe you guys go hedge out on Deribit, or is everything kind of are you guys just standing in between two potential customers and being like a source of matching? How does the flow work?
Yeah. So Abra. Abra Prime services clients, so high net worth institutional and corporate clients on a principal basis. So we allow clients to access spot and options liquidity. On the option side, we will trade on a principal basis, as in we take the other side of the OTC flow and hedge that out in an appropriate manner, and not back to back with respect to the flow. By and large, also the firm takes significant prop risk with respect to vols or some certain directional risk. So really, it's about the risk management of the aggregate portfolio rather than one specific position or one specific flow.
Yeah, that makes a lot of sense. And one of the things that you had mentioned early on were some of the dislocations in sort of the crypto vol space. Crypto vol is still a relatively small space. Do you think those dislocations occur just because of size, or is there something that's fundamentally different about crypto that causes optionality or the surface to be essentially priced differently than traditional commodities and stuff like that?
Yeah, so I think I think there's two components to this. The first one is being liquidity and market maturity. It's still a very nascent market. The market is still very small. You can have large flow essentially create dislocations in the vol surface. Your social size in BTC is probably 150K a Vega. Anything more than 200K, and people will notice it, and you will move the market. And so that type of liquidity constraint or that inventory constraint by the players, maybe we don't have enough dealers with sufficiently large balance sheets yet to kind of inventory all that flow, is one of the is a general opportunity set in this market. The other example, I think, even if we were to get into a more mature market, for example, go into the FX vol market, well, the FX vol market is a very structured market. It's mature. The players, the central banks, and how they anchor to a certain set of factors. But it's still noisy, and there's still a lot of relative value opportunities because there's essentially systematic inefficiencies with respect to supply and demand, and with respect to, in FX vol, it's regulatory. There's regulatory sort of shocks by dealers that needs to be hedged or on a yearly basis. So these dislocations do exist and they do persist, and that's what creates opportunities for sort of faster players
Yeah,
in the space.
interesting. So even if crypto gets mature, just as much as the FX vol market, there'll still always be some sort of like different opportunities just based by like natural hedgers or central banks doing some stuff that they always do, or banks hedging out some sort of balance sheet risk that they do at the end of the quarter or something like that. There'll always be some sort of opportunity like that. That's a very interesting perspective. Uh, Kind of following up on that train of thought, do you think that if we get spot Bitcoin ETF options, that will materially change their crypto vol market, or do you think it's so far like the BITO options or the CME options going to be not that big of a deal?
Yeah, so I actually think that to that point, I actually think that's significant and very important towards the maturity of the derivatives market. I think having options on Bitcoin ETFs is pretty much like having options on spot. I think should the SEC allow really the dealers, the broker dealers in the U.S. to custody crypto and essentially make markets on these BTC ETF options, that's going to create a tremendous amount of liquidity in the derivatives market, and allow a lot of hedge funds and sort of levered players to come in the market. So I think, it's a big step, and it's extremely important to watch, because it's going to allow, enable a ton of liquidity to come in the derivatives market.
Yeah, that's really interesting. So there's a one train of thought or one camp of thought that as liquidity grows, obviously volatility would go down because, or at least the volatility of volatility could go down as well, just because there's deeper pockets. Another train of thought is that the second we open the gates, just like we saw with the Bitcoin ETF, there's a lot of inflows that come in all at once. And maybe the herd is just bigger, so maybe the downside also everyone exits all at once, and you could have these pockets of higher volatility. On balance, how do you think the impact would be from the ETF options?
Yeah, I'm definitely towards that first camp, where I think an increase in liquidity will create a structural decline of vol over time. I also have sort of a long-term thesis that Bitcoin vol should see a structural decline over time.
Mm-hmm.
I think, one part of it is institutionalization and increased liquidity. Will essentially create a more efficient market 24/7 with less gaps, and so more stable price movements.
Mm.
I think a good proxy is looking at gold over the past 30 years. You've had highs and lows in gold vol, but structurally, gold vol over a long period of time, like GFC and COVID, the peaks have, declined over time.
Mm-hmm.
And so, back in the 2021 bull market in Bitcoin, we have the volatility index spiked around something like 150 or 160.
Mm-hmm.
I think even if we have such a bull run this time, we'll probably see a lower high.
Mm-hmm.
And I think really it's, the sophisticated TradFi players coming into the options market, and the listed options on Bitcoin ETFs.
Yeah, interesting. We recently got the ETH ETF as well. Do you see similar do you expect similar interest for sort of the ETH ETF, ETH ETF options? Is that something at Abra that you guys see like as much appetite for ETH and ETH optionality? Or is it very much so like, little brother forever?
Well, I think so far in terms of the ETF flows, by and large, it's been, little brother, and it's
Mm-hmm.
really no interest, right? I think it's been sort of disappointing flow wise, at least for now. I also think a lot of the investor community is distracted by recent events in terms of risk deleveraging, from a more macro perspective.
Mm-hmm.
One thing I will say though is I think ETH is a much less liquid spot market, and so
Interesting.
it's going to benefit more from the liquidity in terms of demand and supply. And so should we have significant inflows or outflows into the ETF, that should drive larger moves in price.
Mm.
And so, that's potentially one thing to watch for. But recently we just have not seen any interest, probably, ironically due to the price action in ETH.
Yeah, that's very interesting. And kind of to, your earlier career path at Goldman, one of the things that we had been noticing at Amber Data is when we were looking at the open interest in Ethereum futures, CME futures around the ETF, there's almost no uptick, whereas Bitcoin had a huge uptick, became the number one venue, overtaking Binance. There was an actual material interest in the CME futures as a result of the spot Bitcoin ETF. So that's kind of an interesting divergence. Over at Abra, do you guys trade any like altcoin options? Is that something that you guys get demands for? Like people want quotes on that stuff? How do you view the altcoin vol space?
Yeah, so I think we do trade altcoin vol. I think by and large, the majority of our interest has been in Solana.
Mm-hmm.
Well, we can debate whether or not Solana is an altcoin with how much interest in volume it sees on a day-to-day basis, but that's been the majority of demand. We have also seen some interest in, different sorts of coins like AVAX, for example, whichever comes into people's interests. I think I think over time, we will start to see more sophisticated derivatives markets around all of these coins. I think the prime major issue is finding really in 5 to 10 years which coins are going to be still around and still surviving. And it's kind of reflexive in the sense that volume will get more volume and more trading, and more interest. And so, we may be with, we may conclude with a derivatives market on a multitude of coins, but with only a certain amount being significantly large enough or liquid enough for more institutional players to participate in.
Yeah, that makes a lot of sense. And in traditional finance, a lot of people will trade like equity index options and stuff like that. I know CoinDesk came out with a few indices. Do you guys, and FTX back in the day had some indices with some futures on those indices. Do you guys look at indices at all, like the CoinDesk index, or have any in-house indexes for altcoins or overall markets? And do people want quotes on that type of stuff? Or do you see the world going towards crypto index options trading at all?
Yeah, I do think eventually we'll have some sort of index as a benchmark for crypto. I think really the number one development that needs to happen is really an ETF that gets approved holding a multitude of cryptocurrencies. I think that's probably step one to get sort of mainstream institutional attention to that, to the index. And then we'll go from there and have a derivatives market built around it. The other sort of development is Bitcoin dominance is still a very, very high percentage of the crypto total market cap. So the index essentially would basically require an index X Bitcoin, or the Bitcoin dominance to sort of decline. Otherwise, you might just have a very, pretty much a beta proxy to BTC.
Yeah, that makes a lot of sense. You mentioned something earlier that I thought was interesting. You talked about sort of the Vega footprint, or like the social footprint of like Vega exposure. When you're running an OTC desk like you are, and crypto vol space is still relatively small, is it mostly the same players that you see consistently, or are you actually seeing sort of new people come into the market from network counterparty sort of customer base perspective?
Yeah. So I think in terms of the counterparties, I think that the crypto marketplace, or the derivatives market, is fairly small, and so you tend to have the same players looking at the same things, and everyone sort of knows each other and sort of knows what everyone's trying to do and what kind of flow people have. And so that's an interesting part of the game theory. But also, as the market grows, you'll have more new entrants coming in, particularly TradFi, institutional hedge funds, of that sort. And that will leave a unique but different footprint on the vol market, with potentially different market impacts as well.
Yeah, very interesting. Cool. Well, thanks, Bohan. Typically, I like to finish the interview with a couple fun, more personal questions. So, the first question is, along your journey, along your way, was there any trading books or any books that impacted you a lot, that you'd like to recommend to readers that you found really good?
Um, I really like. This is going to sound very generic, but I really like the Market Wizard series. I think those were really great. It's timeless lessons that you can read and reread about trading, risk management, and managing risk on a personal basis, but also and at an institutional. It's definitely helped. And so, for anyone seriously interested about trading as a career in risk management, I would definitely say to read those books.
Ah, fantastic. And then, what do you like to do for fun outside of work?
Yeah, so outside of work, my hobby is powerlifting.
Hmm.
So I like to I used to compete in powerlifting, and I used to train for that. And so I train for that pretty regularly. Recovering from some injuries recently, but that's definitely been a hobby of mine that I've kept for years.
Wow, that's amazing. And then last point, anyone who would want a career like yours, like what kind of advice would you give them, or looking back on your own career, what did you wish you had known, maybe?
Yeah. Oh, that's a tough question. I think I think you don't know till you really try and figure it out. I think in trading, but really it's a very difficult path.
Hmm.
And you don't really get a feel for it, and you don't really get to know what you're signing up for until you've really tried it out on your own and
Hmm.
started losing money.
Hmm. Hmm.
I
Yeah.
think that's one of the hardest lessons that everyone has to go through,
Hmm.
and who really wants to take risk. Um, to push the boundaries and see if you're really just passionate about figuring out the game and how to trade, or is it an extrinsic motivator? Is it about the money or whatnot? I think you really have to be passionate about the game.
Yeah, that's such a good insight. I totally get that. And trading the fruits of trading are so flashy that it's easy to like get sucked in, or have people can get sucked in with that. But underneath the surface, the game is a grind, and there's a lot of deep insights into oneself, and how to approach adversity that gets revealed. Well, Bohan, thank you so much. It was great to have you on. Very interesting. I'm excited to see everything that comes up in your career going forward, and obviously we'll be in touch.
Thank you so much for having me.
Absolutely. Thanks, everyone. Catch you next time.